Good afternoon, everyone, and thank you for reading through those disclaimers, and welcome to another one of Avant-Garde's free educational trading webinars. This afternoon for Lunchtime Options Trading, we are happy to host Vlad Karpel, and he is back with us. He's going to talk with us all about options trading and kind of dive into how trading trends can be a great way to look for some potential profits in the market. We're just going to go over some different patterns like flags, triangles, rectangles, and talk about something really important, the role that investor psychology and market sentiment can play when you're looking to make your trade. So Vlad, we're happy to have you. Are you with us?
Yes, can you guys hear me?
Yes, we can hear you. Thanks so much for being here, and thank you to all the attendees who are joining us live on their lunch breaks. Vlad, you can go ahead and share your screen, take over that screen sharing.
Okay, one
And
sec.
start your presentation. While you do that, I'll remind everyone with us live, if you have questions during the webinar, please type those questions into the chat box or the Q&A, and I'll get those questions over to Vlad for him to address at the end of the presentation.
All right. Thank you for having me. I appreciate the opportunity to be back and present. Can you see my screen?
I can now, yes.
Yes, perfect.
If any participants are having trouble, just shoot me a chat. Okay, looks like yes, we can see it.
You
Thanks,
can see
Vlad.
it.
Go ahead.
Perfect. Great. Again, thank you, Natalie. Thank you, AGT Trading, for allowing me to participate in this webinar. I'm excited to be back, and we'll try to do them on a regular basis every Thursday. And today, again, an important topic, kind of reiterate some of the concepts we learned last week on trading psychology, just general concepts in trading, and then go over how to improve your entry and exit prices. And again, I'm gonna I know the name of the webinar is Options Lunchtime, but options are derivatives of stocks, and hopefully this presentation, even if you're a stock trader or if you're an option trader, will help you to achieve better results, whether you're stock or an option trader. So I'm gonna try to, don't be afraid if you're a stock trader, you don't know options, or vice versa. If you're an option trader, you don't trade stocks. Hopefully this presentation will help you optimize entry and exit, right, for your position, which could be important, right? Even 1% difference between day high and day low could make over a long period of time could make a difference in your trading results. So type in your questions. I'll be more than happy to answer them. What would help me for this webinar, if you can just type if you're trading stock or options or both, that'd be one thing that would help me a lot. And the second one is, since we're going to go both using options data and using regular, traditional technical pattern or chart analysis, pattern analysis, just type in if you're a technical trader, if you're using chart patterns or to trade, or using charts in general. If you haven't used charts in trading, then please say that as well. That will be helpful. So you can always go in chat and type these questions. That will be very helpful. And I'll try to answer them by the end of the session. So again, for those of you who are new and who weren't there last week, this is my brief bio. I was Executive Vice President and Head of Technology at Options Express, was online broker-dealer from the beginning, worked in several startups here in Chicago in fintech space, hedge funds, acquired a lot of knowledge of how to build systems and analytics using AI and latest advances in neural networks. And I've been doing that for over 25 years. So my background, and then I'm using this knowledge to actually manage my own account, and you know, also on Yellow Tunnel for the Yellow Tunnel subscribers, showing the results of these analytics. So that's my background: technology, building AI, and managing portfolio. Disclosures are very important. I'm going to go through specific trade ideas, trade signals. So it's important to understand the risk trading stock or options. If you haven't seen the slide or you've never visited optionsclearing.com, I would encourage you to visit the link on your screen to understand the risk and suitability associated with trading stock or options. And you can always pause the screen or take a screenshot and just review the disclosures. But basically, it says that I'm not an advisor. I'm here to show you what I do, in my own account, based on my own risk tolerance level, solely for general education information purposes only. Again, so just quick review. I'll try to go faster this time. What is, 7 pillars, what I think is the most important for trading, to become, to be successful in trading. One is kind of decide what you're trading, right? It could be a lot of people ask, are you trading Bitcoin? Are you trading, penny stocks? Are you trading, Magnificent Seven stocks? Different people trade different, but the concepts are the same, right? Whether you trade in futures or currencies or equity, risk management, trading as your business are very important, right? You should have, your weekly, monthly, annual goals, and you should have clearly defined rules that you write down. Just like in business, you have some kind of bylaws or operating agreement. Same would be in the trading. You would have something in writing that says, this is what I trade, this is how much risk I'm willing to take, this is how many positions I have, right? We're going to talk about positions management, optimizing entry and exit. It's very important. More important is position size, right? Determining how much money are you willing to allocate into any given trade, right? So position size is important. And we talked about trading psychology, being self-aware, right? Emotional intelligence is extremely important. Not only you're trying to predict what the market is going to do in optimal entry and exit, it's very important to learn how will you react if when the trade goes against you. When do you exit, right? And that's why it's important to keep a journal, document that, and try to adjust your strategy. And usually it all kind of boils down to position size. Be patient, maintain long-term focus, set reasonable goals, right? There's always a disconnect when you start trading, what your goal, what you want versus what is real, right? And that gap is something that you would need to overcome as your journey as a trader continues, right? What you think you can make in the market, or what returns you're looking for versus what is the reasonable returns. Um, Again, managing portfolio, number of positions, position size is extremely important. Properly manage risk versus reward, right? You can concentrate on trades that give you high probability of success but low return on capital, or high, you know, low probability event but high return on capital, or high probability low but not both, right? It's very hard for retail investor to structure a trade where you're doing 100% return on your investment, and you have more than 50% probability of that trade, right? That's very hard to achieve. So having that mindset is very important. And again, stick to your rules, document, have trading plan in writing, and then have a trading journal where you document all your trades and go through that checklist every time you trade. So I'm going to jump into current discussion. Please type in any questions that you might have. But I want to kind of talk about and optimizing entry and exit from two perspectives. One is the traditional chart analysis, right, and technical analysis. Let's see if I can figure out anyone reply back to my questions. Trade both. Thank you, Keith. I appreciate it. Option trade, momentum trade, swing trade, spread trade. Okay, based all of chart patterns. Okay. I assume everybody else also at least interested, maybe haven't used it, but try to type in your questions. But I'll try to do a quick overview. So what you see on your screen, and I'll jump into this quickly, is more of an analysis of using options level, because there's a huge, not huge, but there's a supply and demand for different levels, of options strike prices, right? So if you trade options, there's a strike, right, like an insurance. Where for Apple, you can say the biggest concentration on the screenshot, we'll change it quickly to real-time data to 250, right? So you can see the highest concentration of open interest, right, where the bulls and bears meet. Supply and demand is at 250 position. And more often than not, it is actually superimposed, and you can see these entry, so these levels, if you look at traditional technical analysis. So since I put Apple and Apple pullback, let's review some of these charts. So first of all, let's look at interactive chart of Apple. I'll try to do quick because a lot of people did not answer, so I don't know if they use technical analysis or they were, but I'm looking at the Apple chart, right? First thing to recognize is what each of these candlestick means, right? These are, if I hover over any of these candlesticks, it basically shows you for that specific day, right? I'm looking at the 1-year chart daily, right? So I'll try to go a little bit slower for those who are new to this. So I'm looking at 1-year chart, right? And I'm most common, right? Daily uh, chart, daily each candlestick shows you 1 day worth of data. It shows you open, high, uh, high, low, open, close, right? That's why you have in each of these candlesticks, you have 4 data points, right? If it's red, that means it closed down. If it's green, it closed up on the day. And then the high and low are the tail of the candlestick. And that's 1 day worth of information. Very important if you hold in position, for a few weeks, right? You can argue even for a few days. It's very important to look at the daily chart. Daily chart, you can switch to 1-hour chart here, right? And each candlestick would be 1 hour worth of data, right? If you're doing day trading, it might not be important for you to look at the daily chart. So then you would zoom into maybe whatever the time interval. If you hold in position for 15 minutes, 30 minutes, then maybe, very common 1-hour chart patterns, 30-minute chart patterns. I usually use daily and 1 hour, right? I don't do a lot of day trading. And if I do it, it's usually I'm holding position for a few hours, right? So that's important, right? And then you want to identify certain chart patterns, right? Let's just look. Well, here you have, this is a perfect, we talked about triangles, right? So this is kind of a live data, right? So you can see Apple, if you go back in time, right? This is one of the most common pattern is descending triangle, which considered to be a bearish pattern. You want to look at the volume, right? But if you do have a breakdown on above average volume of this trend line, right? This is what is called a triangle, right? And you can have descending triangle, right? Or you can have ascending triangle, right? So if you are using these price patterns and you want to optimize your entry point, usually when you do have a breakdown above average volume, this is where you would enter a short position in this example, right? With the idea that there'll be a continuation, it's a long-term pattern, it broke down. About 70% time, you have a continuation, 30% of the time, you have, false breakout, right? But the odds are on the side that there is a continuation for Apple, right? And you can also find ascending triangle, right? You can see clearly you have an ascending triangle, right? It's a pattern of lower highs, higher lows and same highs, right? Descending triangle, right? Descending. This is going in this way, and this is ascending triangle going that way. Is that after a pullback, stock consolidated, and then after earnings, usually earnings is one event, some kind of a binary event that the stock moves outside of the balance, outside of this pattern. So in this example, after earnings, it broke out of this overhead resistance, continued to grind higher, right? And then now it actually got back to the or getting close to the baseline where it had an initial breakout, right? This is a breakout, and you want it above average volume. And you do want to look at the volume, right? When you have these breakdowns, you want it initial to be above average volume. And then you've seen for a week or two, you have continuation of these sell-offs. And same thing on the upside, where right now we are trading right back to this baseline. And you can, just visualize, and if you want to draw a trend line, right? You can just connect these highs and lows, right? So this used to be support, then it was overhead resistance, and if you continue to visualize, then you know that this is a strong support, 220, right, on Apple. So this is supply and demand for stock, right? And bulls and bears meet at these lines, and kind of think of it as trenches, right? In the warfare, there's kind of a stalemate where the stock is not moving, and it's just gravitated toward this line. Sometimes bulls are winning, sometimes bears are winning, but it's an entrenchment, meaning that there is a large position at these levels of both, buyers and sellers, right? And then we need to decide who's going to be right, and that usually triggered by some kind of events. Maybe it's a tariff, Maybe it's CPI data like it is today. Maybe it's Apple earnings and whatnot. So now if I want to superimpose this, first of all, any questions? No questions. You guys are awesome. Actually, I do like questions because otherwise I'm not sure if I'm going too fast, too slow, or this is, adequate. But if you have questions, please ask them. So now let's superimpose this with Apple, right? So now I'm going back to Apple options data, right? So before I was looking at the price data of underlying asset, and now I'm looking at the derivative, right? And basically seeing, well, what's the likelihood of this 220 strike to hold, and where is the positioning? So you can see right now the highest concentration of open interest, what we call put wall, is at 230. And the gamma flip is at 215 for Apple, around 215 strike. So that means that as long as Apple is staying above 215, right, this green light, positive gamma, the dealers are forced to buy the stock, right? Because dealers have to be delta neutral, right? For every buyer, there is a seller, right? Going back to supply and demand, there's the buyers of Apple, there's the sellers of the Apple, in the middle, there are dealers that have to provide liquidity, and they own their own positions. And when the Apple drops to 215 level, right? When the Apple drops to 215 level, this is supportive. And you can see the 220 strike and 215. Right, so you basically can say, based on traditional technical analysis, right? This was a descending triangle for a few months, then this was ascending triangle for the few months, and now we're back to this line, right? So this is a line in ascent where bulls are not going to give up their positions easily, whether it's technical analysis or just open interest. And you can see right now, in terms of put buying, the yellow line. I don't know, do I need to zoom in? Maybe make it better looking, more clear. Right, this just shows you open interest, right? So you can see, one of the highest open interest is 200, but the next level to it is 220. So with that information, basically, if I want to go long Apple right now, right, if I think that, Apple is going to continue going higher, they are into AI, and this is just a short-term setback because they launched new product. It wasn't integrated with AI, not a lot of good features, but, they are working with Google. They're going to have a new version, and they're going to lead the AI revolution on the, mobile devices because they do have a very large ecosystem. Then you can say, okay, this is my stop level. If it drops below 215, right, maybe give yourself a little bit more room here, 215, 220, 215, then I want to enter the trade, right? So, and that would be the setup, right? The closer you are to 220, right, that's your stop level, right below that level, maybe 215. But you have 14 points to the downside. And potentially we could revisit the highs if the market continues to rally, right? Maybe September, October is choppy market. We're still not clear about employment data, right? Today we have employment worse than expected, right? Yesterday PPI was worse than expected. The market continues to grind higher because because of the interest rate, right? If you look at the interest rates, like if you look at 10-year yield, we're breaking through all the support levels, right? This is a perfect example of another support and resistance, right? Another descending triangle, right? Interest rate has been in downtrend. If I connect all the highs, right, the high points, and if I connect the low points, right, you can see this is another perfect example of a descending triangle, right? And then you have a breakdown, right? And we are reaching the same level as we have during the first part of the Liberation Day, right? When the tariffs were announced back in April, interest rates were dropped because people were afraid of recession, right? And stagflation because of the higher input cost for CPI and PPI. Now it's kind of the opposite, right? The interest rates continue to go on lower, and we are making new highs on spiders, QQQ, semiconductors, all-time highs. Why? Well, everybody's concentrating on lower interest rate. We have interest rate decision next Wednesday, right? And everybody expects 25 basis rate cut, but it could be 30 rate, it could be 50 basis point rate cut, and that will create volatility inside of the inflation, inside of the bond market. and also equity market, right? So it's an important point to keep keep an eye on. Plus, we have expiration week. During the expiration week, a lot of these contracts will expire, right? So going back to supply and demand, right? Most of the contracts right now are concentrated in September 12th, September 19th, right? They will expire. You can see not a lot of people are hedging the October or November expiration months in terms of total positioning, right? So it's all about supply and demand at certain levels. But when these contracts expire, right, there's less people at these levels of entrenchment, right? And then the market, then the stock is free to move either higher on positive news or lower, right? So a lot of people are concerned about next week because of the options expiration. These positions will be removed, and if we have any negative news, like one of those buy on the rumor, sell on the news after the Fed decision, then the market could pull back. I think we could. That's my also opinion, but I think it'll be a shallow pullback, right? And then going back to Apple chart, if you think that this is going to be a shallow pullback, and November, December is going to be a strong time of the year from seasonality point of view, then this trade might make sense, right? You know exactly what you're risking. Let's say, you know, if you're long-term trader, maybe put a stop loss at 215, right? And then you're thinking that it's going to do a catch-up trade along with Microsoft and Broadcom and Oracle, and it will reach 260 level. Any questions on options data, positioning data, right? Looking at the strikes, very often, if you look at the options data, the flip point or gamma exposure or open interest, they will correspond to the technical analysis, but they're more precise, right? They're more precise, right? So, I usually like to do both. If the chart pattern, if it's bullish and it shows me based on positioning data, there's higher demand for calls or I see a clear support, that gives me that affirmation. Any questions so far on triangle pattern options data? Where places where you would enter or exit or technical analysis. All right, we have a few questions.
Yeah, Vlad, it looks like we had a question from Keith asking about EMA or SMA. Do you take those into account when you're looking at these charts and these analyses?
Yeah, it's a good question. Thank you for. I definitely look.
Should someone, basically, in your opinion, everyone's different, but.
Yeah, I could kind of the giveaway here. You can actually see I'm using Bollinger Bands. So for day trading or short-term frames, I don't think how relevant, simple moving average or exponential moving averages are, right? But Bollinger Bands, RSI to a certain extent. I look at the Bollinger Band. I think that's useful, right? To see if something is oversold. Clearly, yield is extremely oversold, continues to be an oversold, right? I looked at the 20-day moving average, 250-day moving average, right? So Bollinger Band, the middle line is 50-day moving average. That has been a good, some of the positions that I'm trading, let's say, let me think about it. Let's say Morgan Stanley. So Morgan Stanley, right? You can see it's kind of walking on the 50-day moving average. It's ascending moving average, and it hasn't broke through it, right? So you know that this is a good support level, and whether it's 20 or 50, this is where you might want to, consider entering. And maybe when it's overextended, maybe you want to wait for a pullback. So thank you for that question. What else? Trade option full time. The iPhone 17. Kevin, thank you. Yeah, iPhone 17 right now it's a disappointment, but if you zoom out, right? Going back to zooming out, right? If I look at the Morgan Stanley, or not the Morgan Stanley, what's a good example? Let's look at Oracle, right? If I look at the Oracle, well, this looks like a really bullish price pattern. Great earnings, the biggest 2 standard or 5 standard deviation move, right? The Oracle moved 40% up. Doesn't have last time it moved 40% up was in 1999 during internet bubble. Probably not a good analogy, but I'm not implying that we are in the bubble, but it is a very unusual event, right, for the stock to move 40%, again, based on the AI. But if I zoom in, right, and I look at the 5-minute chart, right, and like I look just at this portion, well, this doesn't look really good, right? It's a bearish price pattern, right? It continues to deteriorate. So if I'm a day trader or a short-term trader, I might say this is bearish. If I zoom out, to 1 hour chart, right? Different. Then I can say, okay, we're talking about a flag formation, right? But the other chart was a flag formation. You can definitely see Oracle had a strong earnings. It never broke through the open print. It was as high as it was high as three, maybe 45, 350. But now it's back to this neckline, right? It's back to this, again, these trend lines, right? And you can look at the positioning and see on Oracle, now you can superimpose this chart with Oracle's open interest, and then you'll see that there's a very high open interest at the 300 strike, right? So then you can say, okay, I'm going to give myself a little bit of room to the downside to the 300, but I think, Powell is going to do 50 basis cuts next week, and Oracle is going to zoom out, right? Kind of a similar to Broadcom pattern, right? Another flag formation, right? Very strong pattern. Get back to the open print, right? After the earnings announcement. And then you have a positive reaction to the CPI data, right? Or to Oracle or Broadcom earnings. You have these binary events and, stocks in a similar theme or that are highly correlated each other now making new highs, right? So this is an example of a flag formation. But again, you want these continuations to be above average volume. So any questions on flag formation? Oracle short squeeze pop. Okay. Thank you, Kevin. Should purchase volume drops.
Yeah, I think
Thank you, Kim.
you draw a good point, Vlad, just to how the importance that perspective plays when people are looking at charts and making their own choices, right? Whether you're zooming in, zooming out, the different time frames, how those correlate with individuals' own trading plans and their risk parameters and, what they've set out to accomplish. So that's a good call out.
Thank you. Appreciate that. And then just remember all these chart patterns. One thing that it took me a while to realize and, lost some money in the process is that all these chart patterns, no matter what your favorite chart pattern is, it could be like a ascending triangle, right? You've seen all these examples that I give ascending triangle. That does not mean there's 100% certainty that there will be this pattern will come to fruition, right? That the apple will break out from the breakdown from the descending triangle or break out on the ascending triangle. There's these things like false breakouts, right? So trading is about probabilities, right? These chart patterns usually about 60, 70% probability that there are continuation, in the ascending or descending side. But, there's 30% roughly where it's a false breakout. So it's important to superimpose this data with other information that you get, and always think about this kind of what I talked about last time in terms of probability of success, that this is trading is about statistics, right? Apple can continue going higher, right? Oracle can continue going higher, but there's no 100% certainty. So you look at one standard deviation move, or you look at these support and resistance levels, and you basically decide, I think there is 60, 70% chance these levels will hold, and I'm going to place the trade. And then you have to have a clear exit strategy, right? For Apple, exit strategy, I think Apple is going to be in trouble if it breaks below, what's the red line? Not even sure, 50-day moving average, I assume. Probably 50-day moving average. Let me see. Let me just look at Apple. I don't want to say probably. Right? That's kind of So you have 50-day moving average, 200-day moving average. It's a gold cross, right? When the 50-day moving average breaks above 200, 220, and when I used to be a little bit younger and start trading, I would say, okay, all in. I'm buying Apple, putting all my position because Vlad said it's a ascending triangle and it works, right? No, right? It's a probability of certain outcome. Maybe there's a 70% chance it's going to continue higher, but there is definitely 30% chance that the 30 and 50-day moving averages will not hold, right? If Powell next week says we're not cutting rates, right? Or we're cutting rates 100 basis points, right? Something that nobody expects. It could be construed as stagflation or recession, higher probability of unemployment rising, and all of a sudden this pattern doesn't work. So one thing that hopefully out of this presentation that you can get is there is no 100% certainty when you're trading, right? These chart patterns, these positionings, the more signals you have or more information you have, your favorite information, they can increase the probability or give you a higher probability of success. But it's all about distribution of possible outcomes, right? You can have one standard deviation move, You can pull up the date for Apple and just say, okay, Vlad, what do you think is going to happen Apple by October month expiration, right? Let's look into the next earnings cycle or November expiration. Go. November is usually a bullish time of the year. So I can look at the supply and demand data and basically says that, Apple right now is trading at 230. Based on supply and demand data, one sigma move that Apple is going to move 7% higher and get to that 250, which is uh, this level, right? So 250 strike. If all the stars align. But on the downside, right? On the downside, it could reach 210, right? And that will help me, as we approaching closer to 210, 215, then maybe I want to be a buyer of Apple, and if Apple rallies to 250, maybe I want to trim my position. But, Oracle was a perfect example. If you look at the supply and demand for Oracle, actually, you can look at the expected move here. You can look at the expected move here, right? Based on supply and demand and historical move, Oracle usually moves 13%, 10%, right? In the past 25 years, right? And the implied move was 10 to 13%, but it moved 40%. That means well, I'm not really good in statistics. I don't know. Six Sigma move, something that happens only once every 25 years, right? So as long as you look at the trading as probability of success and distribution of possible outcomes, it can help you with some of these setups. Box, my favorite other is box trading. Uh, Rectangles, people call it rectangles. Some people never heard the words box, they more heard rectangles. But let's see, can we see a kind of a box trading? Maybe let's zoom to 1 hour chart. Fits clearly. So you can see kind of these box formation where, oh, actually, no, let me do. A lot of people favorite is Bitcoin. So let's do Bitcoin. IBIT, some of the ETFs. Then I can look, you can see you have a support all the way from here, right? This is the highs from 2024. We reached the same highs during Liberation Day. We pulled back, then we broke out in July, right? We retested them in September, August. So you can see this line. And then you're seeing that, this is the box, right? So it's trading in this rectangular box where it's unable to break it. And you can say, well, when it's close to this level, I'm a buyer, right? And when it's close to this level, I'm a seller. But it trades in a box and could trade in this box for a few weeks, few months, right? The longer it trades, the stronger entrenchment, right? You have open, bulls and bears. And then I would look at the open interest at these levels to see how much of the resistance are at these levels. So that would be a box or rectangle chart pattern. No, you can look at the traditional analysis, right? Basically, there are a lot of signals, there's a lot of platforms that can show you the trend, right? So this is an example where it shows you for Apple right now, when I took this screenshot a couple of days ago, short term it was an uptrend, medium term is uptrend, long term it was an uptrend, right? So that also increases with probability that, maybe if you're bullish on the stock market and you think we're going to make new highs till the end of the year, okay, maybe it makes sense to have some exposure to Apple, right? And then you can structure your trade. You can use stock, right, to look at this level, or, we talked about options trade. So this is an example of a debit call spread we talked about last time, right? And it also shows you, risk versus reward, which strikes you're selecting. This is example of 235 strike versus 240, right? So you can buy 235, 240 debit call spread, right? Your risk is $210. So I'm looking at these screenshots, right? The maximum profit is 210, maximum loss is 290, and gives you probability of success. Just purely based on options data. But if you look at the chart patterns and you look at the macroeconomic data, and if you think market is bullish, then the probability could alter. And it shows you maximum profit. So this is a conservative strategy. I like spreads because I don't have to worry about what my max loss is. When I do debit spread, I know exactly what my losses are. I know what my gains are. And, I can superimpose with technical analysis. I can superimpose it with chart patterns and, option data, and that can help me make more informed decision. I put some other checklists. If you're not doing day trading, if let's say you decide to trade Apple, I propose, especially if you're new to trading, don't risk more than 2.5% of your account value per Apple. Break it into two halves, because potentially, Paul could be next week could be a surprise, buying a rumor, selling a news type of thing. So you don't want to risk 2.5% per Apple position, maybe only risk 1%, right? And if it pulls back, if you think it's a shallow pullback, then you buy additional shares. If you think it's not a shallow pullback, okay, then you exit the position, right? On a spread position, usually 30 to 50%, right? If I invested $2.10 on Apple and it's up, a dollar, 50% return in a few weeks, okay, then that could be an exit, trigger an exit. On the debit spread, if usually you don't want to wait till options are zeroed because then probability that it will have a return is very low. So usually the Q is 50%. So if you bought that Apple spread for $2.10, if it drops below dollar, you probably want to consider exiting this position because the lower the premium, the probability that it will come back in your favor, especially if you don't have enough time, right? If you have September expiration or October expiration, you might want to consider also exiting position. I say avoid binary events, at least be aware of the binary events. Like right now we had CPI, PPI data, that's the binary, right? Market resolved to the upside. We have another event next week, options expiration and Powell's decision. Again, it's a binary event. Either market is going to continue rally and make new highs, or we're going to have that, either shallow or not shallow pullback. Close positions if daily goals are reached, hedge your portfolio. Don't be, it could be long and short the market, right? Right now, I still think it's a choppy market for the next few weeks, or maybe even till end of October. So, you can express your bias using being long and short, right? You have more long positions or more short positions. With options, it's easier because you're doing spreads, so one leg is short, one is long. If you don't trade options, then consider, either inverse ETF, hedge your portfolio with PSQ and SH, or be long strong stocks like right now Oracle, obviously Broadcom, they're all Morgan Stanley, Goldman Sachs. These are all strong stocks that trade in uptrend, General Electric, and maybe you short the weak stocks. All right, any other questions? So if you need to reach me.
Thank you so much, Vlad.
Yeah, thank you.
Yeah, go ahead. I want you to leave that slide up just for a minute so everyone can write down your contact info because we are pushing up right against our time frame here. Want to make sure everyone gets a chance to go eat the rest of their lunch before they go back to whatever they were doing. But yeah, please write down Vlad's contact. If you have questions about his presentation, you can contact him directly. We had a lot of great questions that you actually addressed throughout the presentation already, Vlad. So thanks for doing that. And a shout out to Kevin and to Keith. Thanks for those questions. Thanks for participating. Vlad, I'm going to ask you to stop sharing, and I'm going to put up one screen myself here. Yep. Thank you so much. I just want to remind everybody. Oh, hello. If you, here we go. If you are not yet an Avant-Garde customer, feel free to visit our website, tradeagt.com. We're running a special offer on our membership pricing model. You can get that for free for a limited time through the end of the year. So give our team a call or visit our website and get more information. You can shoot us an email at info@tradeagt.com for more information as well. And don't forget to visit our website, avantgardetrading.com. You can get there by going to tradeagt.com as well. Take you to the same site. Go to our education page. This is where we post upcoming educational webinar information. As you can see, Vlad's right here. He's coming back next Thursday at noon. So feel free to click the big blue register for webinar button and join us again. If you're not already subscribed to our email list for webinar invites, please do so on this page as well. Enter your name, email, click submit, and you'll get an invitation directly in your inbox. Vlad, thank you so much for taking the time. We really appreciate it, and we look forward to having you back next week.
Thank you, Natalie. I appreciate this is a lot of fun. So hopefully you guys learned something today, and send me your feedback. I always love to get some feedback. That'll be great. And thank you again for Avant-Garde Trading for having me.
Thank you very much. Sounds great, Vlad. Thanks for everyone who attended live today and for all of those who will watch the recording. Hope you get some good education out of this and follow up with us with any questions. In the meantime, good trading. We'll see you at the next one. Thanks, everyone.
Thank you.